going to be virtual. And in the last session, we focused on the concept of dharma, the ethics. And we heard from a spiritual leader, how do we follow that? And in this session, we are going to hear from the industry practitioners, how do they follow the concept of ethics sitting in the boardroom. So we have with us two industry practitioners joining us virtually from India. We have the industry investor's perspective from Sanjay Nayar. He is the chairman of KKR India. And we have the corporate perspective, Robbie Singh, CFO of Adani Group. And they'll be sharing with us how the concept of ethics governance are being played out in the boardroom. So let me quickly start the conversation with the two gentlemen on the screen here. So Sanjay, let me start the conversation with you. You come from an investor's perspective, and from your perspective, you see a lot of boardrooms. You see a lot of directors. So what has been your experience in terms of how the concept of boardroom has evolved, and what are the things they are keeping in focus in terms of ethics and governance?
Thank you very much. And it's a pleasure to be here at the IGF. Firstly, it's good to see IGF doing this seminar in the UAE. I think it's making great strides. And I think the word of dynamic alliances is a fantastic idea. So thank you for connecting us. Sorry, we're not as well dressed as all of you, but happy to share our experiences. I think that, given the volatility in the world and the uncertainty in the markets, geopolitical risks, growing customer activism, growing investor activism, I think the role of the boards has become even more important than before. I would say earlier the boards used to be advisory in nature, consulted when they wanted, listened to when CEOs and larger promoters want to listen to them, probably acted upon a little bit. I think things have changed a lot in the last 5 to 8 years. I think a lot of this also coincides with the changing reforms that are happening in our country, in India. The way the corporate governance is being driven right from the top, I mean, that's government transformation, the way they're governing the country. But obviously that translates all the way down to the way corporates are behaving with investors, shareholders, and all stakeholders. So the burden of the board, the composition of the boards, and what they're meant to do, I think has changed dramatically. The private equity industry in India brings in a lot of very, very important capital into India for growth. So we have had a lot of experience. I would say where things stand today, to your question, given what's happening in the country and where we are poised to grow to and grow in the right manner, I think there are 3 very, very key areas for the boards to focus on right now, which is what most of the boards are doing. First and foremost is a long-term strategic vision for the company and sticking with it despite temporary pressures of markets and tactical things that one needs to do. But keeping a long-term vision behind is extremely critical because their number one goal is to deliver sustainability for the shareholders' benefit. I think what that immediately means is that boards are getting a lot more involved, number 2, in succession planning and key leadership selection and changes. Something which I don't think was true in the past, but the involvement of boards now is extremely critical in terms of succession planning as well as in terms of leadership staffing. And third is just a risk oversight. Enterprise risk has become a massive thing everywhere. And given what I mentioned in terms of volatility, the kind of new things that are emerging on cybersecurity, I think just overall risk management and oversight and risk is the third most important function. And the reason I'm highlighting these 3 things, it takes away from the advisory role, but I think it just adds on to it. And these 3 are probably far more important in today's context than in the past. And from our perspective, we focus on these 3 very important things as we look at staffing of the boards and what we expect from our boards. Maybe I'll leave it there and then we can develop the dialogue further.
Yeah, thank you, Sanjay. So let me get Robbie Singh, I had the opportunity to have a conversation with him a few weeks back. And the way he passionately presented what the board is doing to do the right things in terms of making a sustainable world was really stand out to me. And I hope we get a chance to hear more on what Adani Group is actually doing on that. But for now, Robbie, I would like to get a company's perspective as to what is on the agenda of board in this constantly evolving world.
Thank you for having me on the show and at the India Global Forum. We, within the Adani Group portfolio of companies and overall philosophy of the group, look at the issue of board governance as a mechanism for assurance, as a guiding principle. Management and shareholders increasingly are part of a dynamic world where commitments are being made 20, 30, 40, 50 years out. And therefore, we need to be subject to an appropriate assurance mechanisms. So how we look at it is that from our point of view, we happen to be in a sector broadly called infrastructure. By definition, it means that we are incredibly long-term investors or intergenerational investors. So for us, the core principle of long-term strategic value creation becomes very important. Now that, as it turns out, marries with the idea of long-term evolution of global capital as well. As OECD countries mature, their pension pools are rising, and they are pension pools, which means that they are future assets for their contributors today. India's own saving pools rising, it's almost nearly $1 trillion now. And it will also increasingly move towards a significant portion of pension asset. Now that means that we are holding assets on behalf of the future generations or behalf of current generation who will exercise those rights in the future. And they are our investors. So from a board point of view, what becomes important is that the boards are cognizant of this aspect, that they are stewards of investment and of stakeholders. The second thing that we look to engender in our boards is that, and it's not unique to us, it's true for any corporate, is that we operate at the ground level for infrastructure in remote areas. So for example, I'll give you an example. If we have let's say we have a 5 gigawatt of solar power plant in Rajasthan, we cannot mechanically, physically ensure parameter security. It would be cost prohibitive. Now, how do we do that is by having social license. That is working closely with the community. So the second aspect of the board is good corporate social responsibility so that you have social equity. And these two factors, long-term investment and social equity, are what need to be assured also. So I can't say anything. We are dominant shareholder in our companies, 65% plus. But what's important is that how do we provide assurance to minority shareholders? How do we provide insurance to stakeholders who are not investors but are stakeholders, say local communities, vendors, etc. So the board's role has evolved into this aspect. Traditionally, the boards have done this. For example, boards always had audit committees. But equivalent of that for what in governance, there was no committee in India. Still, for example, there is no mandated committee to provide assurance for governance. So what our portfolio company and our chairman Mr. Gautam Adani have instituted, and we've executed that, is to provide an equivalent assurance committee for the board level for assurance on governance. So that is how we are trying to build the constituent of the board, and that then goes to the point that Sanjay also raised, which is that then informs you how you staff the board, how you find the board members, how diversity comes into the board, how different skill base comes into the board, and how do you globalize this perspective in a wider environment. Thank you.
Yeah, yeah. Thank you, Robbie. So I think I just want to steer the conversation into the next phase, where with so many new startups coming in, so many unicorns getting listed, and there's a generational shift which is happening in terms of new board members which are going to come and join these companies. Okay. So in terms of the new profile of directors are going to emerge. So Sanjay, let me start with you. What are the key attributes boards are now looking when they are looking at getting new people into the board? What are the attributes you are looking at?
That's a great question. My sense is that if you just look at the new challenges for these businesses or even the traditional businesses, digital disruption is a big challenge. We talked of cybersecurity as another big challenge. I think the boards have to also think about climate change and ESG in a much more senior way, in a much more serious way. And I think getting a diversity of views is going to become very critical. Now, when you put all of this together, finding good board members, independent directors is not an easy task. For whatever reason, people don't want to be part of boards, that's a different issue. But let's say we could find good people on the board. I would say the most important criteria that I could at least think of is you need a good combination of competency. I would think, without sounding demeaning to the old guys like myself, I think youngsters are going to be very, very useful to have. Fresh way of thinking. I think gender diversity is very critical to bring in a new way of looking at things. And I would say finding board members that have a culture or a style of cooperation. And I've been on many boards and I'm on many boards. I can tell you, when you bring a combination of great competency, a board led by a chairman that can have a culture of openness that inculcates the ability for even the most minor idea to be brought up, and that has a culture where the CEO can actually open up as well as listen when he's being told something, I think are extremely critical things. And that's how at least we think we want to go around looking for board members. And frankly, that's, I think, other new criteria. If you were to put a extra sliver on top of this, it would really be technology. People from technology backgrounds. I think engineering is becoming a huge buzzword, and that is the future in a lot of these new age companies. So getting people with engineering background, getting people, I think, as Robbie said, with a degree of experience from societal work is also extremely important, not only just because you want to preempt what the government is thinking or earning social equity, but also doing good in a good way to earn the brownie points, which give you the social license to do business. And I think all these things are going to become very critical in India as these new age companies begin to disrupt business models and, in fact, even disrupt the way business was done in this country. So I think it is important to find board members that have what I would call a combination of some of these factors. I think overriding all of this, we are finding the boards, the successful ones that we have, are those that can self-critique themselves, self-assess themselves, and correct the way they work. So I know it sounds all a bit heavy,
Side
but
pocket,
I would
yes, I
say
have.
that's really
Should I put it
idealistic the
here?
way we would like to see the board getting created. And we are trying our best, and so is everybody else. But it's not easy. I think it's a long journey ahead. But you're going to see induction of lots of new board members into the boardrooms in the country as the mix of companies that are getting listed is also changing dramatically.
Yeah. Thank you, Sanjay. So, Robbie, I want to just continue what Sanjay talked about, the new age companies, and we also discuss about the new age directors, with their aspirations are different. So, definitely you have the new age direct board of directors, then you have the traditional, the old. So, when you have two different, there's always a conflict of culture. So, how do you think that, a board can balance out this conflict of culture when you have two different set of directors, board of directors in the room?
It's an excellent question. Actually, we talk about this a lot because that conflict is not just at the board level. It can occur at the management level also, given the nature of the change and the speed of change that the businesses are going through, and in India, the growth, and even in the region we are in, UAE, dynamic region, young region, changing, and you get that conflict. The conflict actually is not a conflict. Actually, coming from the same point of view, you're standing on the same bridge, but at two different points. And which is that on one side is exposure, on the other side is experience, or both exposure and experience. The challenge occurs when a person she has exposure, but yet doesn't have 30 years of experience. Now, there could be another person who has experience, but not as much exposure. And that's where the conflict starts, because the person with experience traditionally being, administrative positions are such that could be in a senior position than the person who has a lot of exposure. And that's where the conflict. What we try to do is to build a concept of what we call competency hierarchy and not administrative hierarchy. And that is engendered within our management teams as well. Similarly, to when we look to work with the boards, is to focus on the competency aspect. And when you divorce everything and you come down to competency issue, then I think if a person she has a lot of exposure, but 10 years of experience versus say somebody like me who might have in particular field a limited exposure, but say 25, 30 years of experience, then it becomes incumbent that competency be the driving force of trying to move forward. So how we marry exposure versus experience is by developing a space in which we recognize competency hierarchy and we divorce it from administrative positions or administrative authority.
Yeah. Yeah. Thank you. Just one last question because, just keeping the time in mind. So, Sanjay, let me start with you, then I come to Robbie for a quick comment on this whole concept of great resignation, which is coming on back of COVID, where the talent is becoming such a big challenge for all the companies and the board. So what will be, how should board respond to ensure that there is a strong talent pipeline within the organization? What will be your recommendation for the board?
Look, I mean, it's not something that is kind of a rule or there is a set of rules to follow. At least what we try and do, my own experience when I was at Citigroup and now at the private equity firms, I think a board-driven culture through the CEO, making sure that there is a development of real pipeline of talent, probably level 4, level 5, identifying early high potential candidates and giving them the right kind of breaks and experience is probably the easiest, most organic way of building a pipeline to backfill these situations. Secondly, we find that most of our companies, good managers are those that work across different functions and therefore giving these young, high potential players and experience across different functions early on is a good way again to develop a much more robust CXO candidate. Thirdly, like I said in the beginning, one of the roles the boards are playing is succession planning. And I didn't mean only CEO succession, but even CXO succession. So having your NRC head and your chairman extremely focused and focused with the CEO on making sure there is one or two people behind every CXO, even laterally and even inorganically, looking at similar companies outside and having a pipeline always ready is extremely important. But waking up one day and finding that three people have made lots of $1 million and they walk away and that you're left high and dry, I don't think it's a great sign. So I think the boards will have to be a lot more proactive and develop the pipeline of candidates both internally and externally. And again, that's a culture that the board has to drive. I think that's a very important point you raised. And I think that's one thing that at least worries all of us, that what happens if some people just decide to, chuck it up and move on for different reasons after the pandemic. So good question. I don't think there is an ideal answer for this. I think we as board members and major shareholders have to be just a lot more proactive and preemptive about it.
Yeah. Thank you, Sanjay. Robbie, any quick comment on that, on the talent?
Yeah, I think my comment on this is that I'm old enough to have gone through 3, 4, 5 of these changes. First the investment banking move in mid 90s, and so everybody wanted to be investment banker and wanted to do an MBA and then join some sort of investment bank. I was part of that cohort, and then the tech revolution came. Then GFC came, Asian financial crisis happened in the middle. And now, unfortunately, because here it's a loss of life also, the pandemic. I think these are transient factors. The underlying issue is that we need to retain work flexibility. And it might be news to, and we might think of it as something new, but even all the way back in 1996, 97, I was in IB. We finished a transaction. I said to my boss, I'm in London. I've never been to Italy. I'd like to go to Italy. And how do I apply from there for those that we didn't have forms to apply on computer for leave? And he said to me, you got your mobile and computer with you? I said, yeah. And he said, don't worry, just go sit somewhere. We can reach you. If works need to be done, we'll call you. So what we need to do is to create a flexible work culture which rewards work and meaningful work. That is the basic underlying capability. And today, each generation comes with a new requirement, and this generation that has come in, they have certain aspirations. And I think as corporates, as corporate leaders, we need to ensure that those aspirations outside of work, that they might have aspiration, they are met and met in a meaningful way. That is the defense of this. That is what we tell I tell our leadership team in the verticals. And that's what we converse with our boards, that we need to create pathways where genuine aspiration of the generation that's coming in are met. And then, as Sanjay said, I won't belabor on that. It goes without saying that you need to have N-1, N-2 capability set available to you, either down the line or laterally. And that's just good practice.
Thank you, Robbie. So if I can quickly summarize the conversation. So the way I see it is, thanks to the pressure and measures from the regulators and from the investors, there is a lot of pressure on the board to continually evolve and focus on doing the right things. And that will require new thinking. And that is what we got the good insight from the two gentlemen on the screen, which they have joined us virtually, one from India and one from Australia. So I want to take this opportunity to thank both of them for sharing their insight, and also for the audience to participate into this discussion. So thank you, gentlemen, and have a great day ahead. Thank you.
Thank you. Thank you for the opportunity. Thank you.
Thank you so much.